I've been trading crypto. I've been trying to get more every time it dips low. I've been trading crypto. I've been trying to get more every time it dips low.
Welcome to the ChainLeak podcast. I'm your host, Joshua Roomsberg. Today's episode is about arch lending, institutional design. Today's guest, Himanshu, the CTO of Arch Lending. Welcome to the show, brother.
Thank you, Joshua. Great to be here.
Now, give the listeners a quick introduction of Arch Lending and what you guys provide for the industry.
So Arch Lending is really known as the premier destination for Bitcoin-backed loans in the US. We're known for our exceptional customer service. We're fully regulated, and we hold our assets securely. We started the company 4 years ago, and we've been lending since late 2022. We now have borrowers in their fourth year of borrowing with us, and really, we're your partner for life. So people keep borrowing with us year on year. Our first product was the, let's call it vanilla Bitcoin-backed loan. But since then, we've gone to customers at their use case, really meeting them where they are. So we have a product called Perpetual Income, which is focused on the retirement community. We have a product called Tax Shield that's focused on high-income earners. And we have a number of other products coming out this year, which use our foundational lending basis to provide a use case for people where they are. Now, the product that most people end up using still is the Bitcoin-backed loan, and that's what we're known for. And I'd love to get into details of that as we get through the conversation today.
Okay, now, with these asset-backed loans, you treat your asset as the collateral. Is it only for Bitcoin, or can you do Ethereum and Solana?
Yes, we can do Ethereum and Solana. In fact, we have a number of customers on all of them. I will say most of the book is Bitcoin, and we really speak to a lot of Bitcoiners. They love our focus on security, safety of collateral, and the fact that we don't rehypothecate anything. So all collateral sits in qualified custody at Anchorage with insurance. Anchorage is a federally chartered bank. And as you get that, above 100K in loan size, your assets are segregated. So we can share the address of the collateral with you and prove to you that it is not being rehypothecated.
Okay, now, from an end user perspective, how do I know that I can trust you guys with my assets? And what are the loan terms, time-wise, for you guys having control of the asset?
Yeah, so we believe in show, don't tell, right? So we can show you the assets are secure in Anchorage. We can give the address to you and prove it. I think there's also a lot of social proof. If you look at our Trustpilot reviews, we have over 400. They're almost all 5 stars. And people write essays about the experience with us. This is not just the best crypto product, it's the best financial product I've ever used. And I think that speaks to the level of comfort people have with us. Whenever you need to interact with us, you can reach out to us for a call. You can chat with us on the website, and we're always available. And we really just help you along the way. In a lot of crypto, there's a big issue of customer service. And if you're giving me a lot of your assets, you want to know that you're being taken care of. You want your answers given to you up front. You want to know exactly what you're getting into before you get into it. And I think we do a really good job of that by putting everything front and center. There's no hidden fees. What we tell you is what we give you. And getting to the loan terms, let's speak of Bitcoin because that's primarily the use case, right? So on Bitcoin, the start LTV is anything up to 60%. Now it's a line of credit, so you can keep upsizing it as Bitcoin appreciates. You can take some collateral out as Bitcoin appreciates in value. But let's say Bitcoin goes down and you hit a margin call at 70%. What happens then? So you have 24 hours to either put up some more collateral to get back to 60 or to add some principal, again, to get back to 60% LTV. Now, if you have some, sometimes people are traveling and they're like, hey, I can't get to my ledger or wherever else I hold my assets. Give me another day or so. We can typically accommodate that if you let us know in advance. Now, if you get to 80%, which is a partial liquidation trigger, we are forced to sell a little bit of collateral. But I hope you're coming into this with both eyes open and knowing that that is a risk. But unlike other lenders, we don't sell everything. We sell a small amount, get you back to 60%, and let your loan continue as is.
Oh, now, that's pretty sick. When you think about other loans, they take your asset. It's over. That loan is complete. So with you guys fractionalizing to get it back down to 60%, that's a unique approach to it for sure.
Yeah, because our goal is to make sure that the loan is healthy. Now, if it gets to 80, all we need to do is get it back to 60. That's the same thing as a new loan starting at 60, right? So it doesn't matter to us. And I'm not a loan shark. We're not in the loan sharking business, right? We're in the Bitcoin backed lending business, and we're
Yeah.
fully regulated. We Every state regulator has our systems and does yearly exams on us and knows exactly how we work, how secure we are, and these exams go quite deep. So being regulated, there's a lot of oversight into exactly what we do and how we do it. Now, also our capital structure, which we can get into today as well, does not allow us to do anything crazy with like with the assets. We have to hold everything in qualified custody. We have to keep them unrehypothecated, and we have to follow the rules of our capital structure, which is the rules that I just mentioned to you.
Yeah.
Now, one more thing. Most people don't have just a 1 year need for borrowing, right? Like if you're borrowing against your Bitcoin, maybe you're making an investment in in public equities, maybe you're buying a house, maybe you're investing in your business, maybe you're a miner and you need money for capex. Expecting you to pay me back in a year, maybe you will, and that's fine. But expecting you to always do that and close your loan out at the end of the year is, I think, a bit onerous. So we let you keep rolling your loan over as long as you like. We can never end your loan. You can be the only one to end it. Now, let's say you start in year one. You're like, hey, I need some more time. Let's go year two. And then 3 months in, you want to pay it back. That's fine. There's no early repayment penalty. You can pay back whenever you like. All you owe is the interest for that month, and then you're done.
That's pretty sick. I'm thinking about in in the past, I've pulled out large amounts from crypto
Hmm.
and I purchased my car, I paid off my house. Now I'm thinking about solutions like this. Like, man, I had an opportunity to keep that Bitcoin without liquidating myself out of the market to facilitate these other transactions. What types of uses do you see people using these types of loans for the most? Is it houses? Is it just large purchases in general? What do you see from that angle?
You know, first and foremost, we believe Bitcoin is the reserve asset. It is the only definitively scarce reserve asset that you cannot make more of, right? So if you're
Right.
gonna hold something as your financial backing for life, Bitcoin is it. I'm personally almost entirely into Bitcoin.
Okay.
So now that you have it, you're not gonna just put it away and not do anything with it. You want to get value out of it. So in the past, all you could do was sell, and if you sell, not only do you lose out on future upside, you also have a tax event. A lot of people listening probably have quite a low basis. They've been in Bitcoin for a while. That tax bill is going to be significant.
Oh yeah.
So, step one, never sell your Bitcoin, but also don't settle for just the basic value that you get out of it. Let's extract more from it in a smart way. Credit is a key component of any asset class. In stocks, bonds, real estate, and other assets, it's a multiple of the actual asset value. In Bitcoin, it's still over collateralized, so as a result, it's less than the Bitcoin net asset value. But we're getting to a more mature stage now. As a result, the use cases are quite varied. Now we support individuals and institutions. So we have Joe down the street borrowing 5 grand, and we have a public Bitcoin treasury borrowing, let's call it 50 million, right? And everything in between. Now, use cases obviously are different. Some people use it for cash flow. They're more denominated in Bitcoin than in cash, but you still need cash to transact. So they have it for cash flow purposes. People make big investments from it. So a lot of people invest in their businesses. You know, we funded everything from movies to racetracks to coffee shops,
Oh, that's cool.
data centers, everything, and there's a huge use case there. There's a lot of use cases in real estate, and because our loans are long term, you can actually borrow for real estate. Otherwise, in a traditional loan against Bitcoin, you're borrowing for 1 or 2 years. That doesn't really fund a real estate purchase. A real estate purchase needs to be a long term loan, and we can do that. So we've done many houses, we've done commercial properties, etc. And I think down the road, what we'd love to get into is some combination of Bitcoin and a traditional real estate loan as a mortgage or a construction loan or something. We're not quite there yet, but we'll definitely get there. Um,
That sounds sick. Now,
Yeah, and then also miners and people just using it to buy more Bitcoin. A lot of miners will use it for OPEX and CAPEX, and then some people will just use it to borrow and buy more Bitcoin.
what do you think is the biggest benefit for the transitional shift between traditional finance and on-chain finance?
Look, I think we sit right in the middle of both, and I think we have a unique perspective as a result. We believe in the benefits of the asset while also believing in the benefits of real world contracts and customer service and having discretion on how we can treat clients. Being fully on chain is not our goal, and being fully off chain is also not our goal. As a
Okay.
result, we're in like a centralized world on chain, right? So you come to us, you get the benefits of DeFi. Everything is done automatically. You come in to our system, KYC is automated. You configure your loan, sign your docs online, and you send your collateral. Within 5 minutes, the whole process can be done, and your loan is automatically sent to you. So you get the benefits of DeFi there, but we can actually fund you in US dollars as well into your
That's
bank account
nasty.
same day. So you can actually use that for real world purposes. Um, but you also get the customer service, which is lacking in DeFi. So that's really where I think the future is. And we're seeing a lot of people who have DeFi capital now try to bring it into more centralized operations uh, and take the benefit of regulation. I think at the end of the day, in our industry, regulation has gotten a bad rap. We believe that the future of this asset is more regulation in a positive manner. Now, we've had administrations where that's not been the case. Now things are changing, and I think it's been very good for the industry because at the end of the day, regulation exists to protect the customer.
Yeah.
So for protecting the customer with rules that have been agreed upon by a good and just authority, which hopefully we have now, it's better for customers and it's going to help credit in this asset class scale and add more liquidity.
What do you think are the biggest changes from traditional finance to being on chain? Is it the over collateralization, or is it more unnecessary to use your social security number, your credit score? You're basing it on an asset instead of a credit score. What do you think are the biggest changes?
I think the biggest changes are around speed and access. So in the traditional world, try getting a mortgage. It takes 3 or 4 months, but best case.
Yeah.
Try getting a loan against just your credit. Obviously, we believe that this is a component of your credit worthiness. It's not the only thing. You should also access other forms of credit, and your whole package should be a combination of 2 or 3 different assets and your personal credit worthiness as well. Now, a lot of people who are in the space are not the most credit worthy in the traditional world, but they have a lot of Bitcoin. For those people, well, this is your best option, and it's a great option. And as rates converge and our rates, um, as we speak, we're dropping our rates quite significantly. It's not much more than a mortgage. It's maybe a point or two higher.
Okay.
So and it's an interest only loan. So most of the loans, your personal loan, your mortgages, etc., are amortizing loans, which means you're paying interest and principal every month. With us, you're just paying interest. All the principal is due when you close your loan, which can be a year, 5 years, or 10 years, or even longer down the line.
Yeah, that was
So,
a big thing with my mortgage. I
mhm.
think I financed my house back in 2016, and looking at those monthly mortgage payments, I want to say half or 30% was going to interest, and I didn't understand that. I thought I was knocking payments down on my house, and it was all going to interest, and it blew my mind. So the first chance I had to pay the house off, that's what I did. I paid a 30-year mortgage off in like 4 or 5 years. I mean, that's crazy that most people don't ever get a chance to do that, but I was
Well,
able to
Bitcoin
knock
allows
it.
you to do that, right?
Yeah, I was able to knock it down, but then I didn't keep the Bitcoin. So that's the transaction that I made. You guys give the opportunity for users to potentially pay off their house and keep their Bitcoin. I think that's really
Yeah,
unique.
absolutely. A lot of use cases on real estate are people will borrow to either fund the down payment, which typically you need cash for, or to fund the whole house, and then they'll refinance a portion of it in the future. Uh,
And
the
double back,
benefit is,
that's even crazier,
yeah,
right?
well, the benefit with Bitcoin is that Bitcoin is appreciating. Bitcoin's CAGR in the last 5 years, 62.5%, right? If you look at your house is not growing as much. Even if you're buying prime real estate in downtown Manhattan, it's still not growing that way. In fact, the growth rate from 2015 to 2025 in downtown Manhattan, where we are, which is a very prime real estate market, is 5%. That's cumulative, not year on year. So your house is not growing. So the asset backing your loan is not growing that much. With us, as the asset backing your loan is growing, you can just borrow more. It's two clicks in the dashboard. Within 5 minutes, you're done.
Yeah.
So
Now,
you can
speaking of that, let
extract
me
it.
stop you there.
Good.
Um, in paying the house off, I was looking at the total equity I would have in this home, and it it hit a 2.5x. So I 2.5 times my money, but if I kept it in Bitcoin, I would have hit a five. So I'm like,
There you go.
man, I made 300,000 on the house, but I could have had what, six, 5 or 6 in Bitcoin. I mean, I I'm happy and I'm proud of myself that I was able to pay the home off. A lot of people
Yep.
don't get that opportunity, but I look at the opportunities I left on the table. I'm like, man, you only get one life. So that was, if I have any regrets in my life, that might be my only regret.
Well, you know what? It's never too late on Bitcoin. And people always say, oh, especially people who haven't bought it yet. A lot of my friends in finance who've historically not been the most big pro Bitcoin,
Okay.
they come to me and tell me, okay, what should I buy? I think it's too late for Bitcoin. Should I buy something else? I'm like, no, go buy Bitcoin. It's going to be your asset for life. Everything else
Yeah.
I cannot speak to. Bitcoin will be your asset for life because Bitcoin is different from crypto. It's completely different.
Yeah. Yeah. And that's another thing, like gold's hitting all time highs. You got silver hitting all time highs. Bitcoin
But you can
is
make more
digital
gold.
gold.
But you can make more gold. We just had
Yep.
a gold finding in Uganda. So we found more gold in Uganda last year than has been mined in the history of humanity. So gold
Wow.
is not definitively scarce. And if we find ways to mine gold from
Asteroids.
asteroids
Yep.
and other precious metals, with more supply, the market will come down. I mean, we're in a very localized maximum right now with the gold price. It's an asset, it's a reserve asset, fine. You want to hold it, that's great. Bitcoin, you cannot find more Bitcoin. There's not any more Bitcoin available.
Yeah, no, it's crazy. Now, to transition the conversation, you guys are also involved in the first tokenized collateral loan obligation, or CLO. Can we go
Mhm.
into that a little bit and what that entails?
Absolutely. So let me set the stage for how lenders have raised capital historically. So in order for me to give you a loan, especially in the sizes that we're doing, we're in the few hundred millions now. I don't have a few hundred million myself to lend to you, so I have to go raise that capital somewhere. That's the other side of the
Right.
business that people don't see. But historically, I look at lending as three eras. So in the first era of lending, we had lenders that would take retail deposits, offer interest on the deposits, and then the way that interest was generated is they would go towards the loans. Now that creates many issues like duration mismatches. If there's a bank run of some kind and people want their assets back, you can't get them back because they were lent out.
Right.
So that's bad. I think the industry as a whole has agreed that's bad. And after 2022, we've generally not done that. There are some people that still do it, but for the most part, people aren't doing it. And I think that's good for the industry. Now, the second era is okay, I'm going to go to family offices or different protocols out there, and I'm going to source up different pools of capital. Now, this is still very one off. It's not scalable, it's not long term. These these lines can be called, which means the person or the entity giving the loan to the lender can call it back at some point. So it still creates some kind of mismatch in duration, and there is some risk of a third party there, which the client ultimately has to absorb, right?
Right.
Um, so we decided to go in a completely different direction. In 2024, we worked with Galaxy to raise a CLO. Now, a CLO is a collateralized loan obligation, as you correctly said, and it's how cash is typically raised for loans in other traditional markets, in mortgages, in auto loans, and other kind of like bigger credit markets. Hasn't been done in
Okay.
crypto before. So we did that, and initially it was just a single counterparty. It was a Galaxy providing all the capital, and and we had a small equity percentage, and then we'd go lend it out. Now, last year and all of last year, we worked really hard to get this tranched in different like tranches of seniority.
Yeah.
And in those tranches, what you typically do is you go get a book like this rated by a ratings agency like S&P or Moody's, and then you get it securitized, where you can sell the whole book on like to an investment bank. It sells as commercial paper, right?
Okay.
That hasn't been done in crypto before. We will do that at some point, but a way to mimic that in a much faster way with on-chain rails is tokenization. I think that's one of the most beautiful benefits of tokenization. So we
Yeah.
work with Avalanche on the tokenization side, INX for their ATS platform, where these tokens can be traded. And then we found a buyer for the Class B, which is like not the most senior, but the one just before that. Now this is called Grove, which is part of the Sky ecosystem. Sky is what used to be MakerDAO. So Grove very kindly came in. They did a lot of diligence, and we created a structure together which creates transparency for all the investors. So we work with a company called Accountable, which gives real time, not once a month or once a quarter, real time look through into every single loan in the book backing the CLO.
Oh, that's
This
sick.
is very unique, which also wouldn't happen in traditional
Traditional.
markets where,
Yeah.
like with Bitcoin, loans are marked to market every few seconds, not every quarter or every month. Like your house is marked to market maybe once a year, right? With
Yeah.
this, loans are marked to market in real time, and that transparency flows down to everyone in the value chain. So if you're an investor in the CLO, you know exactly how your money is being invested, how much return you're getting, and how healthy the book backing is. So there's never going to be a scenario where it just falls from under you. So that's the benefit of the tokenized CLO, and we're quite proud of it. I think the future of accessing credit for other lenders is going to be this as well, and I do hope it catches on further.
Now, who chose Avalanche as the blockchain you guys would build this on?
So we work with Galaxy on this. Avalanche has made significant inroads in the tokenized RWA space. I think all of the last 2 years, tokenized RWAs has been a buzzword, but really it's just the speed of execution on Avalanche. Um, Now with us, this isn't a very active market. Like these tokens are not available for retail to buy. You have to
That
be
was my
KYC
next question. Yep.
to purchase it, and we're really only selling in size. So the only sale we've done so far was $50 million to Grove. We're not going to be out in the market selling $1 million or even like $5 million. Like the next tranche is going to be a lot bigger.
Okay. Now, how is this different than what Ondo is doing with their tokenized stocks and tokenized ETFs? I remember it was either yesterday or the day before I bought some tokenized silver ETF
Yep.
shares. And what are the differences between the CLO and a tokenized ETF?
So Ondo is tokenizing U.S. Treasuries and public equities, right? These are assets that are already trading on open markets, and they're tokenizing
Okay.
those to give more access to either non-U.S. Investors or to people that wouldn't historically have been able to buy because of certain capital restrictions or regulatory restrictions. So
Yeah.
it's the same mechanism of tokenization, but it's a completely different use case, really. For us, we've tokenized private credit over here. So this historically has not been available to retail either, and it's not in this case either. What this is it's bringing speed and access to non-investment bank investors into our credit facility. And I will say that after like the launches happened, and even through the past few months, we've seen a lot more traditional investors, banks, investment banks, and such come in and say, "Hey, this is interesting because CLO is something I understand. I've done this before. This is
Yeah.
an asset class I've been looking for an entry point into. This seems like the most comfortable entry point for me to get into because I already understand this." So it's bridging the two worlds, which I think is going to help add way more traditional liquidity. People don't realize The off-chain non-crypto credit market is orders and orders of magnitude bigger than the crypto credit market, right? So we
Right.
really need to bring that capital in for this asset class and this credit market to increase and grow.
Okay. Now, that makes sense overall when you think about the differences. And you mentioned the credit itself is not available for retail, even in traditional markets. They have to
The
be high net worth individuals, or do they have to be high net worth entities?
So investing in private credit, which is essentially what you'd be doing if you bought our CLO tokens,
Yep.
is like investing in a book of loans somewhere, right? So you're getting a fixed income return. So legally, if you're accredited and above, you're allowed in most places, but for operational purposes, you have to be a qualified purchaser for the most part, which is that you manage a f- 5 million in assets or above, not
Yep.
including your primary residence. So with us legally as well, you have to be an accredited investor, but realistically, you want to be a qualified purchaser to do this. And at the end of the day, this isn't something that needs to be given access to everybody. There are many other places to get a fixed income return. Um, this is something which really requires a lot of institutional due diligence and understanding.
Yep.
And I believe that you're investing in something, you should know what you're investing in. And I think this is something that's not easy to understand what you're investing in. The flip side is that you have the benefit of the loans, and you can go benefit from the uh, the incremental wins that we're having, and as a result, our cost goes down, and we pass that benefit on to clients. Which is why today we've launched much lower size loans. Sorry, a much lower rates on loans. Our rates now, and that includes interest and origination, go from 8.49%. So we're finally in the single digits, which hasn't been the case for a long time. Your interest rate is from 7% onwards, depending on the loan size. And then there's a small origination fee. And for every loan size tier that we have, there's a slightly different rate, but the higher you go in size, the lower your rate.
What do you see is the future for on chain credit systems over the next 6 months to a year, or maybe even 5 years down the line?
I think we're going to see a compression of rates we already have, but I think the compression. So there are low rates in DeFi, but there's very scattered different avenues to do that in, right? A lot of DeFi now is looking towards more centralized, regulated institutional offerings to combine with, in some capacity, either that's providing capital or like getting the benefits of regulation, or anything in between there. So
Yeah.
I think we'll see a convergence of rates between CeFi and DeFi. We're already seeing that. And I think we'll see a lot more institutional prime offerings on chain, which will have some component of on chain and off chain activity.
Okay. Now, one last thing before we close out the interview today. Is there anything else you'd like to add? Let's run over those new lending rates and give them your website so they can take the time to go check it out themselves.
Absolutely. So our new rates, which we just launched as we're speaking right now, are from 8.49% APR. That's all in. There's no hidden fees on top of that. It's 7% interest, 1.49% origination. That's the highest tier, and it goes down by 50 basis points for every tier, all the way up to, I think, a high of 11 point something, 11.84 to be precise.
Okay.
I know the numbers. So that's the size tiers, different rates, and keep in mind we do often work with clients on their needs and structure something more custom for them as well. I encourage everybody who's interested and maybe wants to learn more. Our time is available to everyone. Go on the website archlending.com. That's ARCHLENDING, archlending.com, or just Google us. We're very easy to find. There's a big button that says book a call. Book a call with us. Ask us any questions you have. Our time is available. We're here not just to make loans, we're here to educate and really spread the knowledge. So if you have any questions, you want to understand how things work, you just want to understand how you want to deal with this, and you want someone to talk to, we're here. So that's one. We have a number of products for different use cases. The Bitcoin back loan is our primary flagship product, but we do have something for if you don't have an active income, you want yearly tax-free income against your Bitcoin. It's called perpetual income. It runs for life. You can end it whenever you want. The second is
That's
tax
sick.
shield, where you can take the benefit of the 100% bonus depreciation to borrow against Bitcoin and invest in a qualifying investment, in this case, mining equipment, to, to depreciate that full amount against your taxes. So that's for high income earners. The third, which we're launching very soon, is trading, staking, and custody, where it's going to be built on top of BitGo. We're the launch partner. And you get your own enterprise bankruptcy remote from us and from BitGo itself. At BitGo, you can trade from within Arch's platform. You can hold your assets there. And the benefit really is when you use an exchange like Coinbase or Kraken or anywhere, your assets are all commingled. It's not your own account that you're in. Yeah, you have a user account, but all the assets are in one big omnibus custody account. With this, you can use us as an exchange, but your assets are going to be in your own name at BitGo through us, and you can trade with very low fees, much lower than the likes of Coinbase and Kraken. We'll
Okay.
launch that in the next quarter, and I'm very excited about it personally because a lot of our clients have been asking us. A lot of times they'll end their loan and they'll say, "Hey, can I just leave my Bitcoin with you? I'll come back in 6 months and we'll do something."
Oh, that's
I,
sweet.
I have had to say no every time, but now I can say yes, which is something I'm very excited about personally. We will do a card product. We'll actually do two card products. So the first one will be, we'll add a debit card so you can spend your loan proceeds much more easily. And the second, we'll do a Bitcoin rewards credit card at some point. We are looking at.
Let me stop you there. When
Go
you
ahead.
go to withdraw your loan,
Yep.
do you do an ACH transfer, a debit card transfer, or in USDC?
So you can choose. It's either USDC or it's same day ACH.
Okay.
So if it's before the end of banking hours, which are 4:30 p.m. Eastern,
Yeah.
it goes to you the same day. If not, it'll show up next day. If it's a big size, you can request a wire. We can do that as well. And when you
Okay.
pay us, you can set up auto pay. Like if you pay your credit card, you know how this works. You
Yeah.
just go connect your bank account. You can set up auto pay, or you can go make one-time payments, or you can pay us in USDC, whichever you choose, really.
Oh, that's cool. Now, to close out the loan, is it just paying your balance and the interest and it's over?
Just your interest, your principal. So let's say you borrow $100,000 and your interest rate is 10%, right?
Yep.
You're just paying over the 12 months $10,000 in interest. Your principal is not due until the very end. Now, at the end of 12 months, you can pay off the 100,000, or you can roll over for another 12 months and you can just keep paying interest. Now, the benefit here is your collateral is ideally rising in value, and over time, you can also request us to sell some collateral to pay off your loan, especially if the delta has increased. You can just say, "Hey, I don't want to pay it off in cash. Use some of my collateral to pay off and give the remainder back to me." And we do that all the time.
Okay. Now, is there anything else you'd like to add before we close out this interview?
I just want to say credit is such an important component of any asset class. It lets people live their lives and do what they need to do with an asset they work so hard to accumulate. I'm very bullish about the future of credit in Bitcoin, and I think everybody should be holding Bitcoin. But now you can actually do something safe, secure, regulated against it, where you can access credit very easily. Doesn't matter how much Bitcoin you have. You have 0.5 Bitcoin, you have 5 Bitcoin, you have 50 Bitcoin. It's the same for everybody. So it's democratized. People in the traditional world, when they become really wealthy, they go to a private bank like UBS or JP Morgan Private Banking or wherever, right?
Yeah.
And they say, "Okay, I have all these assets. I'm not going to sell my assets ever. I'm going to live the rest of my life against my assets by borrowing against them." It's called an ELOC, an equity line of credit. We do that for people that have Bitcoin, but we don't have to have the $20 million tier for people to get there. We can do that for anybody. And we're bringing that access, democratizing it for anybody that wants to access credit against an asset that is meaningful to them. And now you can do that. So do come to us for any questions. If you want to get a Bitcoin backed loan, it's archlending.com. Very simple to use. We'll fund you same day. And thanks for having me, Joshua. This was a fun conversation. And I look forward to being back at some point.
Yeah, for sure. This has been Arch Lending, Institutional Design. Thank you for being here, brother.
Thank you, Joshua. I appreciate it.
I've been trading crypto. I've been trying to get more every time it dips low. I've been trading crypto. I've been trying to get more every time it dips low.